So we know exactly what it is we are looking for. We are looking for a break and a pullback. When we are in a long trend, we're looking for a break up and a pullback down. So that there is the what. And yesterday also we covered the where. So on H4 and on the M24 and even higher time frames, the higher the time frame, the better the quality. If there's a pattern going on, like a triangle or whatever the pattern is, a wedge, when we extend the lines after point 1 and 2, 1 and 2, then we are looking there and we're looking there and here as this thing gets narrow or whatever the pattern may be. Even if it's a trend line, we are looking at that. So we are looking here and here for the break and the pullback. Yeah, break and the pullback. So for now, we are going to look at when we need to find all these things. That's the next piece of this puzzle, when. And we're going to use free tools to find out when we are looking for these things. And one of them is the Forex Factory. So it's www.forexfactory.com. And it has like 3 things to it here. We're going to use 2 things. Yeah, we're going to use the top section here. This is going to tell us potentially what we have for the week for volatility. Here we can see Wednesday seems to be the most volatile week. So because there are 2 red events going on here. Yeah, we have these 2 red events happening during this week. This is Wednesday, Thursday, Friday, and the only 2 is that. So the whole week for us is probably not going to be that volatile. So that is what this thing tells us. It also tells us when this volatility might occur in the market. To get the filter up, you just click on this little arrow in the Forex Factory, and then you click on the red and the yellow. If there is not a lot of red events, like this week doesn't have a lot, and you want to trade this week, even though there isn't a lack of volatility or a lack of expected volatility, then you can click this yellow one as well. Yeah. So when there's a lot of volatility, a lot of red events for the week, then you just click on the red one. That's enough to find out which day of the week is going to be the most volatile. And then the bottom section of the Forex calendar. That is also something we can use just to find out in which zone we are trading at the moment. Like here on this chart, we are trading in the Asian session, Sydney and Tokyo. That forms part of the Asian session. And if you log on or sign up onto Forex Factory, then these time zones is going to be your time, your local time. Yeah. And if you hover on it, it tells you how long we still have in this period, in this Tokyo or in this Asian session. If you hover your mouse over it, then you will see, oh, it has an hour left or whatever. And here, if you hover on it, it will tell you how long you have left in that session. So what we like to do is trade an hour before the actual session starts. So here in this green line, this is where you are at the moment. This is your time right now. And time moves on and moves on. And then we would like to trade an hour before this London opens, or at least look at our charts an hour before London opens. And also we look at the end period of it. But this hour before London, or the hour before the Asian session, or the hour before New York, that is good times for us. So what is, when is the London session? Yeah, the London session, because Forex is the 24-hour market, there's no central marketplace. Nobody comes to work at a desk and starts the market. It's just forever. Yeah, it's open all the time. Well, not all the time, Sundays is closed. But where we're getting this information from, or why we say London open, it's when the London stock market actually opens, and they open at 8 a.m. in the morning. Yeah, they've been doing that 8 a.m. thing for a long while now. So, which means 7 a.m. is is the hour before. So that means that, like, I saw Richard and the guys talking in the room here about when they are up and how early it is. Here we can see now for Mexico, if he wants to trade the London session, and he wants to prepare for the London session, then he needs to be up at 2 a.m. in the morning, because that's an hour before London opens. And New York, the guys there, is 3 a.m. in New York, or whatever your time zone is. It's an hour before London opens, and London opens at 8 a.m. Then we have the New York session. Now this is going to be better suited for the guys in Mexico or in New York, because this is a more decent time. So for them, it's about 7 a.m. when we need to start looking. It's an hour before New York opens. New York opens at, I think it's 8:30, the stock exchange. So maybe 7:30 or so. But in and around an hour before the time, that's when we want to start looking. We want to start looking for what? Break pullbacks. Where we want to start looking for it when it gets to profit points of interest on the chart, like we did yesterday. But this is when we want to look. Yeah. Do we have any questions on the when part? No, we fine. Okay, that's great. That's great. Okay, so that is the when part all sorted out. And then this is for the Asia session. This is even better for the guys in Mexico and New York, because now they are a little bit more awake and fresh. And that's another thing that Mark will talk about, is in the psychology part of it. Yeah, we need to be alert and all that when we are doing this, because we are trading against real smart guys out there with very good equipment. Yeah. So for Asia, the session is for, it starts about 11 p.m. GMT time, and in London that would be 11 o'clock in the night. For me in Switzerland, it's going to be 12 o'clock. So I'm not going to be too bothered with that, but you guys can try that. It's like 5 o'clock in Mexico. You can have a look at the charts and see what's going on. See if you're getting your break pullbacks during that period as well. And then the second tool that we're going to use to find out when to trade is going to be Financial Juice. This is my new favorite sort of a calendar. So it has a live squawk. So whenever news comes out, anytime during the day, there's this guy that shouts out something. He says, if you have this thing on, then it will just call out whatever news is happening that's going to affect your pairs. Yeah, you can create a watch list and say, look, I only want Forex information, or you can say, look, I want stock information as well, or whatever. I have mine on Forex information only. This is the left-hand side here. So you get the previous figure, whatever the news is, yeah, Euro market PMI, The previous figure was this, the forecast is whatever it is, and the actual is whatever the number comes out. So this number comes out worse than the previous number. But what we are more concerned about is the forecast. If they've forecasted a certain amount and this becomes worse than the forecast, then it's usually bad for that currency. But in this example, we have 9:30 here, 9:30, 10 o'clock. So this news has come out already. It's got actual figures. But when there's a dash there, then it probably not coming out, or it's still to come because 10:30 needs to still, happen. But as soon as you get a figure here, then you know that now we're waiting on the next piece of information again. Like here. Here we can see this is a printed example here. So these figures, the actuals come out, but we're still waiting on the Bank of England rates figure to come out. So this is a dashed line here. And their forecast is that they're going to have it at 0.1%. Previously was 1%. So what's going to happen here now? That then when this number comes out, then they have this feed, this live feed telling you what has actually happened. And the guy shouts it out here if you have this thing clicked on. And this tool was an expensive tool in the past, and now it's free. So I suggest going over to this Financial Juice and just signing up there and, get it while it lasts. I'm not sure how long they're going to have a free service like this. Okay, so any questions before we get to the how part of it? This is going to be now the most exciting part. So we have 3 pieces of the puzzle already: the what, the where, and the when. And for Justin, the slight differences to what you already know or learned, it comes in here with this red blocks here. Yeah, we started off on 240 to get direction. We've changed that now. We haven't changed it. We've added a little bit more so that we can be in line with a more wholesome top-down approach. Yeah, but the newer guys, you can just take it all in. For Justin, just be aware of this red sections here. This here is the slight minute changes. Yeah. Yeah. Richie says the time to trade depends on the currency pair. Yeah, but we just during this house section, or not the how, not during the section, during the live trading sort of section, or that hopefully we'll do. Hopefully we can do that tomorrow or Thursday or sometime in the week when we can expect the most volatility. Then we will show you what currency pairs are being affected most. Yeah. For now, it's just the theory part of the whole thing. Okay, so 480. Everyone knows what 480 is because everybody is already trading this sort of, or not trading, everybody is looking at the same charts. Yeah, 480 means it's 48 pips on Renko. So on M48, you are finding your targets. And on 240, you're getting your direction. M12, this is the change. Richard, Justin, the part we don't know yet, the fine target you don't know yet, confirm direction. Then the setting up, you are waiting for a break. So if we start on 480, it looks similar to the daily on your Heikinashi stuff. These EMAs here are the same as your Heikanashi stuff. This one will be your 633. Then you will have your 200 moving average here, and your 36 and your 12 and your 36 period moving average. This is just to show you that how similar the 48 Renko is to the daily chart. Yeah, prices comes down here, prices comes down there. The way it's moving up, it's more tradable here on the Renko, not as tradable here. You have your tops, you have the tops there, so it looks fairly similar. So we want to have a look at all of the information that we have here. So on the 480, we're not looking for direction, but if the direction is the same as the 240, then we are happy. What we are looking for here are potential targets on the 480. So the same as the homework sort of thing you did yesterday with structure. Find points 1, 2, drag the line, then that becomes your structure. Now structure on your 480 is your potential target. Yeah, so that would be your targets up there. And that would be more long-term targets. The sessions are recorded, but it's also a good idea to take notes, or physical notes, yeah, as we are doing this. So 480 is finding your target. Now, if you can't find a target on your 480, you can go higher up to your weekly or to your 960. Now, this is how it looked on your daily. These are your tops here. Now, that same daily is looking like this on your 960. Or that same 480 is looking like this on the 960. Yeah, so that was your potential target. Now, let's say you are still long and you want to go long. On this chart, if you don't have this information here, then it's always better to find that information on the higher time frame. Like, where is my next target? So your 960 and your 480 is always just going to be about targets. Now, the 960 is equal to your weekly, or not equal, but it's the most similar. Yeah, and it's not a set in stone. It just happens to look like this sometimes, that it's an equal chart. 960 equals to the weekly, but it's not set in stone. Yeah. We're using this weekly and we're using the same EMAs. This is the 200. You can see it's very much respected here. The trend is following down. So that here in this case is a good target if you are still continuing looking for longs. You're finding long 1 to 3s. You're finding long confirmations. Then you know that this would be your target here. Yeah. So this is what EMAs are there for. It's not there as a lagging indicator. We want it to lag so that it can calculate all of these. So now we're using that as a potential to get to a target because we are long. And that is equal to about that. You can draw a trend line there, and then that is where your target is. So even though we are scalping, we are even going down or up to the weekly chart. Yeah, so that is kind of weird for traders. We're scalping, but we've started off looking on the daily and sometimes even on the weekly charts. So this is your 960. You right at a barrier of resistance. You get a break perhaps, and then you can find newer targets there. Yeah, draw your lines up to the best levels. Get better targets. Yeah, and once your targets are drawn in, you can just leave it in there. You don't have to constantly mess around with it, because these targets remain there for months on your 960 and your 480. Okay, so slowly but surely we're getting to more and more exciting charts here, because we are looking at coming down. Yeah. Now we've got our target from our 480, and now our 240, we're getting direction. And the 240 looks similar to the H4. This is why drawing your patterns that we did in the homework is such a good thing. Yeah. So this is my 240. So what direction are we going on the 240? If I can just ask you guys there, what direction are we going on the 240 right now? Yep, that's right. We are going long. Yeah, we are in a buy situation there. And can you tell me why we are in a buy situation there? Okay, those are all right. Those are all right. Yeah. So the recent candles, this is the one thing that you didn't mention. Yeah. The recent candle is long on your 240. That's one reason to go long. The price, like what Dalvin says, is above the 36. So the prices are moving above the 36, above the EMAs. Yeah. So even if prices are down here, if prices are down here, are we long or short? Prices are down here now. Let me draw that in, because this is now the reality. Prices are coming down here, and the EMAs are here, or the EMAs are even here. Are we long or short? This here is what we are faced with all the time. And this is why it's easy to look at the thing when everything is above, yeah. But the problem comes in, what do we do when the prices are below here? So what we want to do in a case like this is preferably leave that chart, because it's not clear. It's not giving you a clear indication what to do. Or if you are really interested in trading it, draw your line, your two dotted line, your point 1 and your point 2, and extend. And if prices are coming down, then you are still long if your EMAs are not crossed down. Here the EMAs are crossed down. Yeah, it's got that cross and it's coming down. Here all the EMAs are parallel together going up. It hasn't crossed down yet, all of them. So we are still looking for longs, even if it's crossed over to here. But we are looking for longs where? That is the issue here. We are looking for longs at a point of interest here. There, a profit point. Yeah. 1, 2, you've drawn your line, you're still long, you're still long, you're still long, because you didn't cross over your EMAs. If you are selling here, if you want to look for sells here, you need a whole lot of other confirmations. Yeah. But if you are selling here, make sure you have that 20 to 15 to 20 pips to get to this target. If you are selling there, because you are drawing this on your 240. Okay, like look at this part of the things along, yeah, this left part here. If you're drawing the parallels here, you don't have any information. You only have 1, 2, 1, 2. Now here, above the EMAs, you are looking for longs. And below the EMAs, you're looking for cells. Let's say that, yeah? Then you know that this is more potential targets here because you've extended the line. Extended the line. Extended the line. And there and there. So that's your potential targets. But when your EMAs are doing this, it's not the ideal situation. Which means it's best just to leave that particular chart and look for another chart. And that's the reason we look at 28 different pairs here. Yeah. So watch for recent price action. What color is that? It's bullish. So I'm looking for longs. Prices are, my EMAs are not crossed down to the short side. So I'm looking for longs. Even when it comes all the way down here and it crosses over. Now all of it crosses over. Now you are looking for shorts when it's crossing over. Yeah. So this is a very important chart. This and your, together with your 4 hourly. Let me just try and get, because when you get this, you need to have your 4 hourly drawn as well if you're interested in trading it. Because if you are long, your profit point is going to want to be the extension of these lines here. If you are long, you would want to trade somewhere there. That's the extreme. This is angle changing here now. It's lowering your risk here. But that is the extreme there. And if it goes, prices makes a higher high, and then back to the extreme, you're looking for longs because your EMAs are not crossed over. So all of these, the 240 and the H4 needs to be looked at together. Are you with me? Okay. Right, so we've got our direction and we've got our target. And now we need to confirm our direction. Okay, so we want to confirm that we want to go long. Now, how do we confirm that we want to go long? Is we using the M12. So the confirmation that we are going long is that after we see the break here on your M240, you are looking for a break pullback in the same direction on your 120, on your 12. When that happens, we are confirmed long. So this line here, this one, comes in from your 240, from your higher time frame, and then you get this break pullback, confirming it on your one. This is your 120. Yeah. Do you understand this part of it? So on your, this line here, this line is coming from your 240. That line. So then you're jumping to your 120, which is this chart here, 120. Yeah, that's your 120. You need to then see a break and a pullback like you see here. Now you are confirmed long after you get that white candle. So after that, you can go down to M6. Okay. So going over it again, 480, you're finding your targets. 240, you're finding your direction. 120 is going to confirm your direction by giving us a break pullback. A 1, 2, 3, and A, B, C. A break up and a pullback and then an entry. Then that confirms that you are now looking for longs. Right, then we come to the M6. That is setting up, and it's the break of structure. So this whole piece here to the left is all confirmation that you need to see as a reaction trader. Yeah. So you are looking at what the price action was before this red line to confirm what it is you want to do. So all of these things happens on your higher time frame, everything before this left line here. So you did your whole analysis. This was your hour before you came to the charts. This, Dalvin, is the M6, yes. But you've done all your analysis already on this chart. You went down to your 480 already. You looked at your target. Your targets are up here somewhere. Yeah, target that was done on your 480. Yeah, then your direction, you found that on your 240, and then you confirmed it. This here is the confirmation. This break pullback here, massive big confirmation, moves up. That all happened before, and on your 120. Now this, your M6, you are looking for structure breaks. Structure is 2 points with a extension. Structure, in this case, is Elliott waves correction. This year, from year to year, up here, was motive. You are looking for the correction. And it's going to be a 3-wave move. And this is why when you see this move down here, you need to see a move up and down. And that's on your M6 structure. This is what we call a structure break. So you have all your analysis done here to the left already on the other time frames. Yeah. And then on your M6, you need to find structure, and the smallest piece of structure is a 3-wave move for a correction. You can get an ending diagonal, prices coming or more down like this as structure, then you're looking for the break of that structure. But it starts off with only just 2 sort of points there. So this is structure that is broken for us here. 3-wave move down, down, up, down. And as soon as there breaks through, you are dropping down to the lower time frame. Yeah, that's your points. And then you get your structure break on M from your M6, and then you dropping down to the lower time frame. And all of this was confirmed before the time. This was your structure break on your M6. And then your setup. And in this example, it's a bad looking setup, but it's a setup nonetheless. And quality is something we're going to talk about also. Now, I'm going to keep these things to, 45 minutes in length here. And if we need to continue, we will continue either tomorrow or Thursday. But this year is a bad looking setup, but a setup nonetheless. This comes from your M6, this line, and your minimum break pullback here, the minimum is a 2 brick retracement. So you need 2 bricks coming back down after the break here on the M3. Okay, are you guys with me on this? Everything before this red line was confirmation. And now we can drag this red line even down to here because we've included our M6 analysis. So we've done analysis on 480. Now that's 48. Guys, you need to just bear with me with the numbers. I think some might not understand the numbers properly. I see Justin is explaining what M6 is to Dalvin. Yes, M6 is the 60. Yeah. So, and that only when we talk about 3 or 6 or 12 or 24, it just means that each one of these bricks needs to move 24 pips, or in this case, it's 3 pips before it changes to another brick size, or to the next one. Yeah. So we have our structure breaking on M6. You're looking for a break up and a pullback. And in this case, it's a bad looking one because we're looking for also for quality. But this one works out well enough. You get your 2 candle pullback, your entries are there, and your stops are below there. Okay, so the how continues here with what is it that needs to break. It's the structure on the higher time frame. So this structure here, in this case, was in the form of a trend line. So it broke on your M6 there. And you're looking for your break pullback. The same thing that we are talking about, the what. So the what is here. And the quality of the what is something that we also need to talk about. So any form of structure, in this case, it's a triangle again. So it needs to break. So you're looking at this structure on your M6, and then as soon as it does a break, you are looking for the entries on the M3. Break, pullback. And the pullback needs to be a minimum of 2 bricks. Yeah, 2 bars. And in this case, it's a range that's been broken. So the higher time frame range is, in this case, it's your M6 again. You're looking for the break of that structure and entries on M3. So we are going to just practice on to determine the direction, because this is the part I feel is the most difficult. So like I asked you to do the homework, you will see here that this is the reason why. If you can draw structure on your higher time frame, your M24, this is the same as your 240. So if you can draw structure, and that together with your EMAs and what color your candles are, that is going to give you the clue as to the direction. So where I'm pointing here now, yeah? Here, are we long or short right here at the point where the red dot is? So over here, are we long or short? In this area over here. Just here. We have white candles and prices are above the EMAs. Guys, are you still with me? Okay, so we have white candles and we are above the EMAs. So we are looking for longs. But at this area, we've already drawn our structure. We can see that our targets are right up there. So here, if we only have a few pips, less than 40 pips or so, then I wouldn't bother taking it. I would wait for the break and the pullback to get the direction. And I'll wait for as long as it needs to wait. And let's say, that's good, Justin. Let's say we are here now and we see red candles. Yeah. Or yeah. Let's say we are here and we're seeing red candles. Yeah. Which direction are we trading? Here, right where my cursor is. Which direction are we trading now? There are red candles and we are above all the EMAs. No, we are still looking for longs. Yeah. So, Dalvin, the reason why we are still looking for longs, even though we saw red candles, is because we are above all these EMAs and we are taking this as a register retracement. Whenever we see red candles, but we are above the EMAs, yeah, then we are still looking for longs, but we are looking for longs. We are looking for longs at the best possible place. And if you don't have a good enough line, like with your 2 points, like here we have prices going up there, and you don't have a good enough retracement, then you can use this as your area to continue that long situation. Yeah, this is again part of the extreme. The reason you're minimizing your long idea here is because this is your extreme there. That's where you want to look for a long. Yeah. But here, the angle has now completely changed. You have 1, 2 points. This is now the area you are looking for longs. That's your area you are looking for longs. Now, in this area coming down here, even though prices are red, you are still looking for longs. Because you now got a point. You got 1, 2, an extension. That's your profit point. You're looking for your longs here. Even though prices are below your EMAs, it still hasn't crossed over. It's still pointing long. These are all 3 EMAs. It hasn't crossed over yet. So you are still looking for longs. Yeah. Watch this particular video again, guys. Now here's some more structure here. All the way up here. And you get a red candle. Now, Dalvin, what direction do we want to trade? Candles are red now here. Which direction would you want to trade? Yes, that is correct. Can you tell me why? See if you can tell me why you are still looking for longs even though the candles are red there. That is correct. It's because the prices are, the EMAs are pointing long. Even if we are in here, we are still looking for longs because the EMAs are pointing to the long side here. Still. And this is all on your 240. You are looking for your direction. On your 480, you were looking for your targets, hopefully somewhere up there. But irrespective of what color the candles are, we are looking for our longs and our shorts based on how the EMAs are looking. On average, it's been going up. Therefore, we are looking for longs. And where are you looking for it? At the profit points over there. This is structure as well. So this is a downward flag. This is upward flag. This here is just a correction. So we are looking for breaks of all of these little patterns. Yeah. Okay. So where prices are right here now. Yeah. This it is white candles. Yeah. What are we looking for here now? Are we looking for longs or are we looking for shorts now in this area? Yes, we are looking for shorts. And the best place to get that short is going to be when we can find a nice trend line. And if we can't, then we're going to use the EMAs as a guideline as to where to actually now pull the trigger. But we're not talking about triggers on M24. We are only talking about direction. Now, in later on, it's definitely now not going to happen today. But in other sessions, we're going to talk about why this is a good long as well. But let's not confuse the issue based on the bones of the strategy, the skeleton of the strategy. We are looking for shorts in this area. Yeah. So then you have your trend line break from your M24 here, and then to confirm that you are in that direction. Remember I said you want to try and look for longs here as well. This was a little bit of the long, but to confirm your short idea, you needed to see this, a break and a pullback. So now your idea is confirmed that you are looking for shorts, and that you're doing on your M12. Yeah. So this trend line break here is that. This is your 240, your M24. That's broken. That's the same line. drawn on your M12. Now, to confirm your direction short, you need to see a break and a pullback and a red bit. So now you confirmed short. Now, you look for structure on your M6 and preferably a short correction, which means you are looking for prices to move up somehow. You find structure. As soon as structure breaks on M6, you're looking for the break of it and the pullback. Then this is your first opportunity to try and get short here. This is your M3. This here, this big massive line was from your M6. It was this line here. That line, as soon as it breaks there, as soon as that breaks, then you are looking for a move down and a move up, which is your break and your pullback. This is a long example. You have structure here. In this case, you had like a wedge sort of a structure on M6 breaking. And you got your entries, your break and your pullback. And in this case, you have structure in the form of a correction, 1, 2, 3, a line back down. And in this case here, you have structure breaking 1, 2, 3 coming down. That's your structure break on your M6. Here is structure as well. You have a triangle. So when you've got all your analysis done, all you're looking for on M6 is a structure to break. Looking for here is a structure to break. Any structure, yeah? A trend line, triangle, another trend line, whatever it is, that's the areas that we are looking for. Yeah, in this case, structure was your trend line. So back to this one, structure, broken there. This is your line coming down from your M6. And then now your M3 breaks, pull back, and then that there is going to be your entries. Now, I'm going to end it here, and we're going to talk about the quality over quantity in the next one. Yeah, it will probably be tomorrow. I'll send you a message again. I'll send you a message if we're going to get the lesson tomorrow. And then we're going to try and look for the live trades, because I think we said Wednesday was going to be the best for volatility. Now, do we have any questions on what we have so far? I'm just going to go over what we have quickly and then end it before we go over quality over quantity. And that, Justin, is also going to be a little bit new. Yeah, so we are looking for targets on your 480. So that's a target that you found. And then you on your 240, yeah, that's also 48 just, and that's 24, yeah. That's pips, 48 pips, that's 24 pips, yeah. So here you're looking for your target. Here you're looking for your direction. Now, it doesn't matter if you have the target and your direction. If your M12 doesn't point in the same direction. So if your target is above here, if your targets are up here long, you want to have this pointing to the long direction as well, which means you want your candles white and going up, and it's above the EMAs, or it's inside the EMAs, or below the EMAs. It doesn't matter as long as the EMAs are crossed over in the right direction. Yeah. So that's looking for direction. And then if it's retracing, if you see a red candle on 240, it's just retracing. Up until where is it retracing? You look for possible good opportunities on your M36 or on trend lines. And then on M12, you need to see confirmation that it's going in your direction. So if you saw a long and you're looking at long targets, you want to see a break pullback and an entry on M12. You want to see that, preferably close down to the M24's break there. So that's what you want to see confirmed. Then once you've got your confirmation, then M6, any break of structure you are looking for. That's a trend line. 1, 2 extension. So if it breaks, as soon as that happens, you're jumping to M3 for what? A break and a pullback to the long side. Entries and management and all of that will be in the next. Yeah. Dalvin, you can look at this video again in the Scalper course. Yeah, you have access to that. So that is it. If there aren't any more questions on this, we will call it a day. Yeah, it's gone over 15 minutes over the time because I think that we don't concentrate for longer than that. I've made that mistake in the past. Talk too much. So I'm going to leave it here and we will look at the next session tomorrow. Any questions you have, we can also talk about it in the Discord. Yeah, just pop in the questions. But make sure it's just about the parts that we have covered so far. Okay, guys, if there isn't anything else, we're going to leave it at this. And we'll give you the information about the next part tomorrow or later on today. Yeah? Okay, good stuff. Okay, bye-bye.